So as you've probably seen in the press, there is a stamp duty break until the 31st of March 2021. What that has done is encouraged a lot of people that maybe weren't thinking of moving to get moving if they've got the deposits and the equity available in the property that they own. A lot of people are tied into mortgages on 2, 3 and 5 year fixed rates, but if you didn't know, you can port your mortgage with you. So if you are looking to take advantage of the stamp duty break, you can lift this mortgage off your house, drop it onto the new one to avoid any penalties if you are tied in on a fixed rate. So that's quite a good tip at the moment. Not a lot of people know that that's available to them. And for the rest of you out there, really you just need to make sure that you're all on top of your solicitors, pushing them like crazy, using your estate agent to help you through that, to communicate with the vendors. Communication is key when you're buying a house at any point, never mind now if you're trying to beat that stamp duty deadline. Deposits. So with your deposits at the moment, you can still get away with a 10% deposit. A lot of people out there think that there's none available at the moment, but you've got Nationwide that will still do first time buyers. Again, they still limit the term, they limit where the deposit's coming from, but they are still available. Again, rates are a bit higher than they were pre-COVID, but that's going to be the case now because they're taking a higher risk. So they're going to charge that little bit more because they're taking more risk by giving you a higher loan to value on the mortgage. Your rates get slightly better with a 15%, but again, you know, a lot of lenders have pulled out of that market as well at the moment, and your rates get a little bit better at your 20% level of deposit as well. If you want to put more than that down, then the rates get really, really good at your 40% deposits and above. Which means you're going to get the best rates in the market. You've still got 2, 3, 5, 7 and 10 year fixed rates out there. Obviously just be careful you don't want to tie yourself in for too long if you're going to change in the future, want to move, you know, life changes, so you don't want to be restricted about what you can and can't do. But going back to my stamp duty tip, you can port that mortgage, so there are things you can do subject to terms and conditions of the lender at the time that you did decide to do it. Surveys. So at the moment, a lot of lenders are doing automated surveys. Now what that means is they won't go out to the property, they won't physically drive by. They'll actually do a desktop automated valuation with the information they get from the systems that they use. Sometimes it's accurate, sometimes it's way off, but that basic mortgage valuation is purely for the lender to assess that if they were going to repossess the property, they're going to get the money back. So in that event, really, you're probably going to want to buy, if the property is older than 10 years, generally you're going to want to pursue a home buyers report. Now a home buyers report, instead of 10 minutes and ticking a box, they'll spend an hour or two in the property and they'll traffic light grade each area of the property. So if you think of it as a car MOT, red is a fail, or red on a property valuation would be that you may want to renegotiate the purchase price, you may want to pull out of the purchase, or you may want to get a further report just to find out what the issue is so that you can manage your own expectations in what the costs are going to be once you've completed, or it might give you fuel to go and renegotiate on that purchase price. Amber is like wear and tear, so if you think on your MOT, you may need tyres in the future, you may need a service. On a house, that could be a gutter's hanging off, a gutter's leaking, a tile's missing off the roof, or just general wear and tear. And that just, again, manages your expectations on what you might want to do when you get in the property. It's not an area that you can really renegotiate on. It's more to give you a bit of information about the condition of the property to help you cost up what the repairs are going to be once you move in. And they're probably repairs that you don't need to do straight away. Your green areas are a pass. So many areas of the property generally do get a number 1 or a green. So again, you don't have to do anything in that area. That's just clear to go. It's just the reds and the ambers that you need to worry about. Home buy reports are probably going to cost you around £400, £500 depending on the property value. The higher the value, the higher the cost. But it is recommended at the moment in a world of tech where all these lenders are doing automated valuations. You're not going to get much information about the property at all. So if it is older than 10 years, I'd advise speaking to your broker or speaking to your bank or speaking to me just to find out the intricates about your home buyers reports, just to help that decision making when you are buying the biggest asset of your life. Finally, I'd like to finish on a good news story. I had a client that was buying a property, they were buying a flat, and it was a 90% mortgage that they needed. Now, as you know, they're very sparse in the market at the moment, but again, Accord dipped into the market for a couple of days, and because of that, and because of the fact that they do 90% mortgages on flats, I was able to get the client the mortgage, get it approved, get the mortgage submitted, and get the survey instructed in a matter of hours to try and get it in before the deadline to ensure that they continue with the purchase. Now, if that client had come to me today, I probably wouldn't have been able to place them. So again, it's more important than ever that you speak to your broker or give us a call and we can help you move forward in an ever-changing market. Hope that helps and hope to see you next time.